Hey, Gunnar. Hey, can you? I can't hear you.
Can you hear me?
I can hear you now. Yes, I'm just
Good
looking
deal.
at your thing that we found. It looks very good.
Yeah, I found a lot of them, but the only thing that scares me on that one, um, which which one are you looking at?
Um, the first one, except it's really hard to read some of the numbers, but
Yeah, that one I can't remember which one that is. Is that terraces or is that the other one?
it's 125 units.
Yes. So I like that one, but it seems a little overpriced. There
Yeah,
has
they
to
all are on the market. Yeah, we have to get what's called the whisper price. Do you
be
remember that?
the
Yeah,
whisper price.
the
That's right.
whisper price. Yeah.
That's what it really is.
Yeah, you're right.
Um,
It is overpriced, and because the cap rate's too low.
yeah.
But I like the fact that you can assume parts of this, make the capital raise easier. It's 125 units. Um, there seems to be nice parking, doesn't there, outside of each of the unit?
Yeah, I liked it. Like I said, I just thought it was a little high.
Yes,
You
it's
could
high.
probably, yeah, but
Yeah.
we could work that down if they're serious sellers.
Yes, and they will have a lower price. They just try to get more than they're
Right.
entitled to. That's very normal, you know?
Yeah. Oh yeah, and that's what we all do when we go to
Yes,
sell.
that's right. Yeah, well, it makes sense. We want as much as we can for it, don't we?
Yep.
And it's a
And
pro forma as well, which you got to be careful of. We'd want the latest T12.
yeah,
Pro formas give the wrong impression.
I don't look at the pro form as a bit more than nothing because they don't
They
mean
don't
anything to me.
mean nothing.
No,
Yeah, that's right. There's somebody's wish that
that's all
one
it is.
day, yes, that's right.
That's the broker getting on there saying, "All right, come here, come here."
That's right. Yeah.
No,
So,
at
and
no, I
it's
go
well
ahead.
produced. It's a good template, isn't it? We can use this to create our own. We can do
Property
these
packages,
in Canva
definitely.
because Eric had said he's got about five in Canva that he does. That we can present to
That's
do
true.
capital raise. And
Yep.
yeah, we can develop something like this and spin off it. Um,
So I've been thinking about what, not necessarily what I want to do, but what I can do in
mm,
this business and what value I can bring. And
mm,
I definitely want to be. I think acquisitions is what I want to be most. That's pretty much all I want to do later on. And this first deal where I'm still in the construction bit, and once I get this first couple deals done, I'll have some money to put into the construction business to get it turned where I don't have to worry about it anymore.
yeah.
Not necessarily where I don't have to worry about it, but I don't have to be there day to day. Because like today, I mean, there's so much work on I mean, it's crazy. I mean, we've
Mm,
got this week's going to be a crazy one. So
right, right.
it, but no, I was thinking on the acquisitions and stuff. So I've been working through that, what I can do, and I've underwritten bunches and bunches of small multifamily stuff. So I knew I needed a software for my investors and for everything. So I found a spreadsheet that I went through. I think it was, I can't remember what, Bigger Pockets. That's who it was. So I went through Bigger Pockets and got on there on their little page, and I found some recommendations some of the guys had made, and I went with one of them, and it's a really good spreadsheet. I mean, it breaks down all of your returns, all your investors' returns on each one of them. It's crazy all the stuff it's got. So that underwriting is something I like to do. I like to underwrite them, and
Yeah, good
I'm fairly
practice.
good with numbers, but
Yeah,
I enjoy it. I really like underwriting.
yeah. It's good to practice, and you only get better over time. So that's good. That's great, Gunnar. Um, yeah, and I wanna, I like acquisitions too, but I would my my thing is capital raise is going to be where we're going to make the most progress.
Is it?
So I've got to, even though I'm not as attracted to that, I still need to do it.
Right.
and learn it and get skillful and better
Yeah,
at it.
and that's like the acquisition. That's what I was looking. I was looking through our book. The acquisition fee. You don't. The actual acquisition guy doesn't get as much of the actual GP percentage, and I'm fine with that. I mean, I'm
Yeah,
okay with not having a lot on the GP percentage, especially for the first couple times, because we're
well,
gonna have to do a lot of it together
yeah.
for the first couple ones, and that's fine. Like I said, I mean, if we split our acquisition fee on the first one, that's what
Yeah.
I was thinking. To be fair,
Well,
I'll
actually, talking about that, maybe I'm trying to figure out which it is. Is it 5% of the purchase price or is it 5% of the 30%?
it is 5% of the purchase price that you get paid when you close the deal, and then
Yes.
you get like a. It says here on the book. I lost it. I had it a few minutes ago.
Because it seems very high. Because if you
Yeah,
think $20 million, that would be $1 million
yeah.
acquisition fee.
The acquisition fees are high,
That
but
seems very high to me to get paid
but
$1 million on a $20 million deal,
right.
you know? Yeah.
Which it depend. I guess you could adjust that depending upon how much you wanted to put into it and how much work you want to do on the acquisition side. Because I mean, you can go all the way from getting attorneys lined up. I mean, you can get
Yeah.
property managers lined up. You can do
Uh,
all kinds of good stuff to where
Everything. Yeah.
right.
I think the acquisition manager should take care of it till closing, get it
Yes,
closed. Yeah.
yes, I
Yeah.
think so as
Yeah.
well. And I've read online that 5% is a little high. That you won't get that most of the time. Most of the time, you get 2 to 3% on acquisition fee.
Yeah. And Eric mentioned that, didn't he? But he said, no, we got 5%.
Which we can try for 5, but as as some as my being a noob in the business, I don't know that we're gonna get 5, or I'm gonna get 5 anyway.
Right,
I'm
right.
fine with that. But if and I don't think we'd have any issue getting 5 as long as we pitched it correctly to our
Yeah.
investors. I don't think they would have any issue with
Yeah.
that.
They
And
don't because it's
yeah,
part of the closing costs. You see
right.
that
That's just
that's why I remember with Eric,
yeah.
it's a no-brainer. It's not coming out of the seller's pocket.
So
We're
they don't.
raising that money. Yeah.
Yep.
So yeah.
So I think that's the role I want to feel, and that's what I'm gonna get better at that. But I was thinking, to be fair to you, because I know you were talking about the lady that you met that was really really good, that you had a great conversation with. That was in Pace's network
Yeah.
about
Binu
her.
Jetty. Yeah.
Yeah, yeah.
Yeah.
Is that who you talked to?
No, I haven't actually spoken to her yet, but she's responded to my post on Facebook on her group.
Dang,
She's getting to know me type of thing because
good.
I'm being more active on social media. I posted a whole load of videos again today. I did that on Saturday and I'm boosting my channel.
Yeah.
I got 19 new subscribers today
Well,
on
heck yeah, in
YouTube.
a
Yeah.
day.
Yeah, in one day.
That's
So
good.
that's not bad when you're just starting. So I've got
That's pretty good.
94 subscribers now, and
Heck
they're
yeah.
all investors.
Yeah.
And had five good conversations this morning um, with investors. And at the moment, I'm being brave. I'm putting them on my YouTube because I think people like
Yeah.
interviews. So
They
I'm putting
do.
those on there. So I'm putting those on there. And then, yeah, what else? Yeah, those are the wins today. Well, I was talking to a broker, but it was on a convenience store and a small apartments, not
Yeah.
really related to what we're doing, but
What we're up to.
this is more my real estate activities because I help Zaffa, you see, with his business. So it's
Gotcha.
more that side of it than
Good
our
deal.
side. But
Yeah.
one thought I did have, which I'm a bit nervous about not. I haven't secured the domain name for us yet. Did you want me to do that? I could do that if you wanted me to. It's
Yeah. And that's what I
straightforward
was.
capital. Yeah.
Yeah, and that's what I was going to ask you about. All the expenses that it's going to cost us to get this stuff set up. If we can break it down, I'm happy to pay half of them or whatever,
Hmm.
and that way it's tried and true. So if you just let me know whatever they're going to charge, and I'll be happy to. We can set up
Yeah.
some sort of, you can send me an
You
invoice.
probably know this, that when you get a domain, you can pay for a year, 2 years, or 5 years. It's always good for SEO purposes to get the 5 year one. So you
Okay.
get 5 years worth. And the other thing that's very good for SEO is if you get you know what I mean by SEO, I presume.
Yeah, I do. I don't understand it fully, but I do know what. Like, I've got a guy that does that for me because I
Yeah.
don't get into
This
that.
is this is to do with search engine optimization.
Yeah.
So it ranks you on the search engine. So one of the ranking points that you get is how serious you are about your business. So if you get 5 years, they know that you score points there. You score points if you have an email related to your domain. So there's expense of that. And then you get points if you obviously have a website that people can go to that reflects your domain. So there's expense there. So now we don't have to go in all the expense right away.
Right.
We can secure the domain and then upgrade to a longer time if we want later on. And then we can do the email later on as we progress, or we can do it all at once. So
How do you feel about going ahead and doing the domain and the email, and then because I think we need to get a little bit of credibility, or at least have a deal under our belt before we get a website. Not necessarily before we get a website, but before we can have a prestigious website. You know what I
yeah,
mean?
yeah. There's no, the only fear of loss is the domain name, and you can secure that initially. So SEO at the beginning doesn't matter because we don't really want people to find
Right.
it, right? And we haven't
Yeah.
built the website yet. And as you say, it would be nice to have a bit of history. So,
Yeah.
so if you like, I could just secure it,
Yeah.
and like a holding pattern. And then we're ready. We can do the 5 year with the email and a website and go full in it then,
Yeah.
which I think is probably the better route to take right now.
I agree. I think that's
Yeah.
the best route to go.
Okay, I'll do
That's
that.
our first business decision. Hey.
Yes, that's right. Yeah, that's right. And it's nice we're recording these because they act as minutes, when it comes to the
Um,
formalizing the business, right? We've
yes,
got them recorded. So
we've got recording
yeah,
minutes.
yeah, that's
That's
right.
good. I
Yeah,
didn't think anything about that.
yeah. So
Um,
that takes care of documentation because we got it recorded, you see. Yes.
right. Oh
Yeah.
Lord. Well, that's
Yeah.
good. Let's see. So some steps that we've got to take. So we've got to get our domain going. We've
Yeah.
just got to. I've got to build some more broker relationships. And the more I look at these markets, I really like Georgia. I really like the
Yeah.
outskirts. I really
I
like it.
do. I do. I
I
like
mean,
Georgia.
I
Let's
really,
fix on Georgia because it's bigger than Knoxville is really poor when I've
yeah,
looked at it. And although I know, as I say, I know a good number of brokers. I've oh yeah, the other thing I did today was the Power Team template. I filled a lot
yeah.
more in. I've got two SEC's attorneys. And listening to Vina Jesse, we need to contact him very
Okay,
early on because we shouldn't do anything when it comes to capital raising until we've talked to an SEC attorney.
okay.
Otherwise, we could be thrown in jail before we even
We,
start. Yeah.
yeah,
Okay.
we could be in hot water quick.
Yes, very quick because we're
And
dealing
not
with
even
money.
knowing, not
Yeah.
knowing what not trying
Yeah.
to make a mistake, but that's
Yeah.
you gotta be careful on that stuff
So
there.
I hated that with on the call. I listened to Vina Jesse on that one.
Good
Um,
deal.
Yeah, so yeah, I agree with you. Let's concentrate on Atlanta. It's a far bigger market and I think they have more larger um complexes, apartment complexes. So
I agree.
uh
Do you have any contacts in Atlanta, brokers?
no.
I don't either. I'll start because I pulled a lot. I've looked at a lot of deals off LoopNet to track down those.
Hang on. Yep, decline that. Right. Sorry about that.
All good, my friend.
Yeah,
Uh, but I get on. I've been on LoopNet and I want to make sure I get the right broker because I don't. And I this is kind of not fair for me to say, but I don't want a young guy. You know what I mean? I
Okay.
don't want somebody that's brand new to the business. It's not
Yeah.
fair for me to say that. But
Right.
I'd like to have somebody that
Well,
has
who's the
credit.
realtor on this one that you sent me? I mean, this
I
is
think
the asset class that we want to look at.
I can't remember his
So
name. Maybe
I
Jim.
this could be one of our brokers,
Yeah,
you know.
I've got Ian Shaw. I've got Ian written down here, and he looks. He's. I'm gonna do a little bit of research. He's with Bercadia, which is a good firm. Um,
We got
Pretty
the
big.
team profile here. What's that? Are they realtors or it looks like the partners and associates,
Yep.
marketing, Bull Realty.
Bull Realty. Yeah. Okay. You're looking at a different one than I was looking at the 172 unit.
Well, yeah, both of those we could find who the broker is. So
Yeah, I think
here we go, Andy. It looks like it's Andy Lunsberg or Michael West.
Michael West. Okay. Yeah, but that's what I'm gonna plan on doing this week is try to get a couple. But see, so when I called a local broker here, he asked me, and actually he asked me. He said, "How many brokers are you planning on interviewing?" And I spoke without really thinking about this, and that was a mistake. But I've learned from that mistake. I said probably 5 to 10 from here to Knoxville, which was a mistake. I shouldn't have said that.
Hmm.
But and then at that point he said, "Oh, okay." And he says, "Well, we really don't like having competition. If you're saying you're going to have 5 or 10 different brokers." And then and
They
I
all
didn't
like
think
you to sign this exclusive agreement, you see.
that's what he wanted me to. That's what he asked me to do. He said, "Would you do that?" Well, I thought he was talking nationwide, and I said, "No." I said, "I'm not signing an agreement. No, not." I said, but in the Kingsport Tri Cities area, I probably would because they are the biggest firm in this
Well,
area.
here's what you actually say, okay? Because this is what I've been a realtor, so I know exactly what you should say as an investor.
Okay,
What you say is, I'm more than happy to sign an exclusive agreement for a particular property.
for a particular property.
Yes, those are the additional words that you say. Yeah.
Particular property.
Yes, that's
That's,
right.
that's what I need to know.
Yes.
Thank you for telling me. See
Yeah.
those the knowledge you've got. I'm
Yeah.
telling you, man, it's
Yeah.
killer.
Yeah.
It
So
is.
it doesn't lock you in, you see, to other things. Well, yeah. So, yeah,
That's
if
probably
they're bringing a deal, you can sign an NDA, non-disclosure agreement. You can sign an exclusive agreement on just that property. That's fine.
okay.
It's more than fine. Yeah.
Good deal.
Mm.
That's good. Because he asked me that, and I told him no, and then at that point, he almost kind of he was hateful with me, and
Mm.
I wasn't being, he was a little hateful, and I was being stern back, but I
Mm.
wasn't, I'm not mean. I wasn't being
No.
mean or nothing, but it got that way for a minute. I said, I don't care to for, locally on a per deal basis. And he said, yeah, locally is all I'm talking about. And I said,
Yeah.
okay. But he's never called me.
That's why it says in the training, doesn't it? Practice outside of your target area,
I
first of
thought about
all.
that as soon as I did it. As soon as I did it, I was kicking
That's right,
myself
because
in
you
the
don't
butt,
want to burn boats because they'll talk, you see, and it's a small world. So
especially up here.
yeah, so do practice, practice in Montana. Okay, that's your thing.
That's a
You're
good
never
place.
gonna, or Alaska. You're never gonna do them up there, all right?
Okay. Yep. Oh Lord. Yeah,
It won't get back to Knoxville from Alaska, it's
no,
not far. Yes.
we'll be all right all the way up there.
Yes, that's right.
Oh Lord. Yeah, that'll. But yeah, those are the
Yeah.
learning things. I mean, I
Yeah.
guess. I mean, it
It's
just
fine. I'm glad you're learning. You're failing forward. It's fantastic, so
that's the
it's not a
game.
problem.
You just got to be able to keep taking failures and keep getting it.
Yeah.
But I was going to look at some of these deals and underwrite them. And when I get one underwritten with this new template I bought, because I paid $200 for it,
Okay.
but it's advanced. I mean, it takes care of everything. I mean,
That's really cool. Yeah, because
it,
that's worth spending that money on because you'll see all the different components and how it works and everything and get the knowledge better that way. So that's a good
I
investment.
think thought it was because I mean it makes it and the time aspect of it instead of sitting down and having to do that's just crazy.
Yeah.
You can't do that on a big deal like this.
And it's a spreadsheet, you said, is it? Yeah.
Yes.
Okay. So make sure you understand it, because at school you got calculators and what have you and things, and it does all the math for you. But you got to learn how to do it, right? Even though you got a calculator, right? Same with the
Oh, definitely.
spreadsheet. Make sure you understand how they arrive at the different figures and everything. And I
Right.
think you probably do
How they
already, because
multiply them.
we had those exercises in the classroom, didn't we? Yeah. I bet you were very
Right.
good with that. Right. Yeah.
It was simple. Yeah.
Hmm.
That was a lot easier. And that's, your cash on cash and your, cash or your cap rate and all that. I can do all that, and I write small deals on a piece of paper, but it's just when you get to having your Class B shares or your Class C shares or
Yeah.
how many investors here, your IRR, that becomes a lot on a piece of paper.
Yeah.
But
Yeah. Yeah. Funny
but
you
I'll
mentioned IRR as well. I learned a lot more about IRR. It's very important when we do capital raise to know the IRR, and that's what they focus on. So it's important
what
to
does what does
establish that.
what are the what's the nitty gritty of the IRR? Can you explain that on a deep
Yeah,
level?
very simple, really. It's what the investor will get back for his money they put in.
The internal rate.
So yeah, the internal revenue rate. So it's the combo of the quarterly payouts and the share of the equity. So if I
Okay.
put 100,000 in and I get 200,000 out at the end of the 5-year project, it's 100% IRR, right? I've doubled my money.
Gotcha.
Yeah, yeah,
Yes.
yeah. So
Good deal. So is that the IRR? If it's 20% per year, so in 5 years that'll be 100%, correct?
well, it's compounding as well, so it wouldn't be quite
Oh, that's true.
100%.
Yeah, that was just a thought. That's what because I was looking on that sheet and it's where it says IRR is like annual IRR. I didn't know if we offer like a security for a 5-year term, is it they just get 20% on their money in total, or they get 20% annually?
Yeah, it's a good question, because they're not leaving. They get, say they put 100 in, then the first year they get
Mhm.
20,000 profit. That
Right.
it's a distribution, so it's not left in and it's not compounding, is it? So they'll get 20. Say they might get 20 each year. They would have got 100, so it would be 100%, right? Yeah,
So the per annum, yeah. Okay,
yeah, yeah.
that's okay, but it
But
wouldn't be compounding because it'd be
no,
paid out at
that's right. Yeah,
quarterly.
if they
Gotcha.
could leave it in, it could compound, but they don't.
Right.
Yeah, it's not compounded, and then they have a share of the equity, so it could be well above the 100%, right? Whatever we saw.
So, and that's what I was asking one of the guys down there at the class. Um, when they do their payouts, they do a mix of the cash flow and the equity percentage. So they don't. The way I understood it, and I might have understood this incorrectly. So let's say that they get. We've said that we're going to give a 20% return. They average it out between the amount of cash flow they have and the amount of what that share of equity is worth. So, because if we paid 20% per annum on cash flow and stuff like that, and then a 5-year term, and we sold it, and they had a 3% equity. Let's just say they had 3% equity. If they had that, well, 3% of a $20 million deal is pretty hefty. So if you just put in however much money for this much percentage, if we sell and you get 3% of the sale price, or once we close, if you get 3% of that plus the money you've got from the cash flow over the years, that's I don't know how we'd
No,
make
it
any money
doesn't
with that.
work like that. Yes.
Right.
Remember, distributions are based on profits. So there has
Yes.
to be a profit, and there may not be. So there wouldn't be a
Right.
distribution. And then remember their preference shares. So they get paid 7%. right? So
Preferable
on the
shares.
of the profit, yeah, of the profit. So
Gotcha.
um, he said accredited you might pay 8%, but that's what they get in distributions, and then the profit rolls on to the end of the project, and then that gets distributed then according to their percentage ownership.
So they get both sides of that.
Eventually, yes, but we're at the end of the project when we sell the project, we see what profit's been made, and they get distribution according to their ownership.
To their ownership
So
of the property.
yeah,
Okay, I got you. That makes sense now. So if they've got, let's say that we've just had it cash flowing really well for 5 years,
yeah.
and they've got their 20 or whatever the gross profit is, and we've paid them so much over the course of 5 years that our quarterly payouts, we take what they've made there along with what's still left in the deal, right, when we're selling, and we're averaging that out to where they get a 20% return total, not 20%.
No, it doesn't work like that either. So,
Okay,
so they'll get 7% distribution on their money as we go
for
along, the cash flow, if there is a profit. Okay, if
okay,
there isn't, they're guaranteed the 7%. And then at the end of the day, they don't take into account what they've been paid. That's like cream on the cake, as it were. So
okay,
the profit then gets distributed according to their ownership.
okay.
Yeah,
So they get 7% of the cash flow every quarter
yeah.
for 5 years,
Provided
and
there's a profit. Yeah,
provided there's a profit,
yeah,
and then once we sell, if they have a 3% equity share, they
yeah,
get that 3% from the deal.
yeah,
Okay, all right.
yeah.
That's what I was wanting to get
Uh,
cleared up there.
yes, because if you think about it, we don't know what will happen, right, in 3 or 5 years.
Right.
There might be only a little profit, or there might be a big profit, and they'll get a percentage that reflects their ownership in it.
Gotcha.
Yeah,
Okay.
whatever
That's
that
what
that is.
that was one of my main questions, even when I had it to class, was if they're getting cash flow every month, according to whatever it was, how does that work? But that you answered that. I've got that figured out. So
Yeah.
I'm glad we got that figured out.
Otherwise, there might not be enough cash. You might have seen the project, right?
That's
If
what I
it's
was
not
thinking.
related to the cash flow, it has to be related to
Right.
what's been made, right? So yeah,
Good deal.
yeah, yeah.
Good deal. So now that let me clarify one more thing. That 7%, that's each investor, correct?
Each investor.
Each investor gets 7%. Okay. We'll
Yeah.
probably have 30 to 40. Is that about right? Investors. It depends on how big investors, though. I mean,
Yeah,
that's the
that's right. Yes. Yes.
and how do. But here's the question, Graham. How do we determine? Oh, I figured that out. Sorry, that was
No,
a.
no, they're good questions. I like these questions because
Well, that's what I
they
asked
help
because
us
I.
to understand it. Yeah, and we do need to understand it, right?
Right, definitely.
Because we're going to be
So
explaining it to people that want to invest. Yeah.
right, and they need to. I need to be able to not
Right,
have any.
right, absolutely. Yeah, that's exactly right. Now, these are great questions, very important.
So so let's say that we need. Let's just say we need $1 million for our capital raise,
Yeah.
capex, down payment, everything. $1 million. So on that $1 million, if we get, I don't know, let's just say we take investments of 25,000. It's for easy math. I'm gonna do some numbers here. Um, if we do
Yeah.
it, we need $1 million.
So that's 40, isn't it? We need
That's
40 of
that's
those.
40 right there. So if it's equal, it's easier to say, all right, everybody gets this percent. But if let's say you pick up the phone and you call somebody and they say, all right, I want to invest $224,755, just random.
Mm.
How do we, give them that much? How do we determine how much equity they get for that amount of money they put in?
It's a percentage, yeah? So it's 224 over 1,000, whatever percentage that is.
Okay. So if we need $1 million, that's what I'm trying to figure out here. We've
Yeah.
got $1 million, and now we've got somebody that says, "Hey, I'll bring in."
224, yeah.
Yeah,
So
whatever,
No, I
225.
like it. I like it. Now let's do the awkward because that's 224. I like it. So it's 224,000. 224. We're running out of time again.
Oh Lord. If you're not doing anything else after this, we can have a Google Meet if you would like.
Yeah. Except that doesn't get recorded.
Oh, does it not?
So it's a 22, they would have 22.4%, 22.4% of the ownership of the
Okay.
LP side. And
And
then
then
22.4% of 70%.
yes. And then if somebody else picks up the phone, or you pick up the phone and somebody else says, "Hey, I want to invest 25,000," so they would just get 2.5%.
Yeah, it would be much smaller of that 70%, you see.
Gotcha. So
Yeah.
I see that makes sense now. So if it was a $6 million, we would just divide it out by that.
Yes.
Okay.
And
That.
on the deed, I've seen them where it says that they have a percentage. It's stated how much ownership you have, that percentage
Mhm.
of the apartment. So you have a
Gotcha.
particular percentage share of it.
Gotcha.
Yeah.
That was one of my big questions too. Was how do you determine how much everybody gets equity? But it's just on how much money they put in. If you put in 50,000, you get this much.
Mm.
Whether it's $1 million capital raise or a six
Right.
million capital
Right,
raise, you
right.
just
And the more you put in, the bigger percentage you have
right,
of that 70%. See?
right.
Yes.
That's what. So okay, so they're LPs, so they can't make any management decisions.
No.
Okay, so they
They're
can't.
totally
They can't.
passive. Yeah.
Good.
Totally
Good.
passive.
That's what I was thinking because, and I knew this from the get. I knew they were passive, but I just wanted to make sure that they can't all get together and say, "Hey, we've got 70% of this. You guys
No.
have 30.
No.
Gone."
They don't have a mouth at all. Yeah.
That's all that matters. That's good.
Yeah.
And we wouldn't never do anything to where they would be dissatisfied on purpose. But
Well, that's right. I mean, we
right,
want them
but
to invest our money again in the next one.
exactly. We
Yeah.
want it to be a good deal. Yeah,
Yeah. That's right. We look after our investors very well. Yeah.
that's
Because,
the model we need to have definitely.
yeah. Yeah.
Um, what I'll and that's what I'm in the process of doing is building my pipeline more because I want to be of value to you. You know what I mean? Because I
Oh,
I don't have the knowledge or the
you don't need the knowledge.
credibility.
I have the knowledge, right? You got the energy and the youth and everything else, and you're knowledgeable. You do have knowledge. You know what I'm talking about when I say a cap, and or what's the difference between a cap and a capex? I mean, the man in the street wouldn't have a clue, would he? Huh?
You're correct,
Yeah,
but still, I don't. I want to pull my weight. You know what I mean?
yeah,
I really do because I've
yeah.
always been in all my little ventures. It's always been just me, and I've always been go go go. So
Right.
now when I have a partner, I don't want to put too much on them. I want to do my part. You know what I mean?
Yeah,
I don't
I
want to
don't feel
load
you're
them
doing that at all. You're great. I look forward to these calls. Yeah.
good. That makes me happy. That's good.
Yeah.
At
No,
how
you're
much?
great. Yeah.
What time we got? Okay, we
Yeah.
got 5 minutes.
4 minutes. 4:31. Yeah.
Good deal.
Yeah.
Let's see. So we could go
What's that?
ahead
Yeah.
and get our domain. So that's
Yeah.
something we can be working on. And if you feel free to email me, usually am doing looking at deals and stuff till about
Right.
10 o'clock at night.
I tell you what, then, as we've agreed to Atlanta, if you want something to do, let me task you with finding um, the mortgage lending broker. Okay.
Okay.
So let's imagine that we've got found a deal. We want to find a mortgage for it. Okay.
Okay.
So in Atlanta, see what you can find. Find two.
Find two mortgage lending brokers
Yeah.
for Atlanta.
Yes.
Good deal.
And
Me
that will help there. And then we do need a property manager as well.
in Atlanta.
Yes, but I'm going to look there as well. But if you find them easily, look for a property manager, and I'll do the same, and then we can compare notes. If we pick the same one, well, it will definitely go with them, right?
We'll know they're the right one.
Yes, that's right. So if we
That'll be
pick
good.
the same property manager, because we need to do that. How are you getting on with your homework? Are you managing to fill all the sheets out that they do on the homework?
Yeah, I am. I've got it all, which I don't see. I don't. My printer is down, unfortunately, so I don't print it. I have to do it on freehand and sheet of paper. But I'm up to date. I'm on week 3 now. I'm on week
Okay.
3, day 1.
Oh, very good. So
So
you've
I'm
done the broker calls,
yes,
yes, and you've done the what's that? Research property management companies. Have you done that?
I did that, and I did that locally. I did both of those locally.
Okay, very good. Okay, fantastic.
That
Well,
there's a lot to learn. I'm excited to get more through a little bit further through the process because I feel like there's some more in there to learn. But that I'm gonna have to. I don't know because I'm running out of Gunner already, and I'm not even got started, and that's my problem because, like I said, I'm dated. I mean, that business cannot run without me, which
right.
is not good. I mean, you want to be, but I've just started. I've been in it a year and a half. I mean,
Yeah,
we're
that's
okay,
fine. That's
and that's
fine. The
it
good
is.
news is this isn't going to take a lot of time, and I've got time. So I think we got a good partnership here because you've got
Good.
to work and I've got the time, you see. And yeah,
And
yeah,
that's
we'll get
good.
it done. Yeah, we'll get this done. And you're keeping up with the homework. I mean, I'm still not quite caught up to you, nearly there, actually.
You're getting there.
But
You've got your foot on the gas.
yeah, I'm doing a lot of practical stuff. I mean, I've been on Zooms today. I've been on done 5 calls. I've shot a video, reshot my video. Who's Graham Norris? So when
Yeah.
people book an appointment with me, they get my history. Oh, I saw another copy of a book today. You see, I've done a whole
Did
lot of stuff today. Yeah.
did you see the order? I ordered your book. It'll be here Thursday.
Oh, very good. I can't wait till you get it.
I can't either. I'm
Yeah, yeah,
excited.
it'd be nice for us to go through that, and you can ask me questions. Ask me all the hard questions, all right? Because
I
I
will.
haven't put. It's only 26 pages, so and I can go into a lot more depth with you and explain it. Don't be frightened of hurt my feelings or anything, because there's a lot to learn, and
Yeah,
I did make a lot of mistakes, so it'll be good to drag those up again. So
I do. I
yeah,
understand,
yeah,
and I'll do that definitely. And that's same for
yeah,
you.
yeah.
I mean, anything that's pressing or whatever. If it has to be said, we'll make it right. We got to do what we got to do. It's business.
Yes, and we're about to be cut off, so I've really enjoyed our call again. I'm going to publish it if you want to review anything, that it's
Yeah,
on my YouTube channel. Like and subscribe if you haven't already.
I sure will.
I got to
That
practice saying that. I haven't. I think of all the videos I've done, I haven't even said that